Hi, everyone. Welcome to this webinar organized by BSN. My name is Eliza Gkritsi, and I'm a reporter with Technode. I cover Fintech, blockchain, and cryptocurrencies based in Shanghai. And I'm very happy to have here with me two wonderful speakers to talk about how blockchain can help the world fight climate change and find a sustainable future. In the order that I see you on my screen, first we have Bill Kentrup joining us from Hong Kong. Bill is at Allinfra. He's the co-founder and head of Origination. Hi, Bill.
Hi, thanks.
And Michael Sung, who I think is in Shanghai. Michael is the chairman of CarbonBlue Innovations and the founding co-director of the Fudan Fanhai Fintech Research Center. Hi, Michael.
How's it going, Eliza?
Good. And I'm in Sichuan, actually, a wonderful place for sustainable energy. So can you guys introduce yourselves a little bit more, and then we'll jump into the questions? Bill, you can go first.
Sure, happy to. So thanks for having us. Appreciation to BSN. So I'm, I guess, by longer background, an environmental scientist, used to do a fair bit of research out in the oceans, looking at CO2 balance between the atmosphere and oceans and how that impacts global climate change from a scientific perspective. And in the past 20 years, I've been out in Asia, more on the environmental finance side of things. So for, let's say, the first several years, investing with through a role at a multinational in a lot of biofuels, biodiesel, bioethanol. I set up a climate finance platform back in 2004 within that group, and we were investing in energy efficiency, renewables, waste management, and it was all on the basis of reducing greenhouse gases and getting compensated or creating revenue from that activity. China was a very big market for us. It was one of our largest markets. We were active in tens of projects over the years in China, energy efficiency, renewables. We had some of the largest volumes of emission reductions achieved under Kyoto Protocol back between 2004 and 7. And then in 2007, went to set up a similar business at a bank. I ran the Asia Pacific carbon finance business and clean energy investment business for about 8 years in Asia Pacific. And then in recent years, through Allinfra, we've been looking at ways to use, I would say, technology broadly and, for certain applications, blockchain, to create efficiencies, reduce risk, create optionality in those markets, all with the goal of accelerating and expanding environmental finance and ultimately to reduce climate change. So that's kind of my brief history in time. Again, based in Hong Kong, but generally an Asia Pacific view of the world.
Bill, that's a long history. Michael?
Yeah.
Cool. Yeah. So I am the co-director of the Fudan Fanhai Fintech Research Center. Can you guys hear? Yes.
Gotcha.
Yeah. Okay. Yeah. So, we really focus on sort of marrying the world of this new digital asset innovation with the traditional finance, structured finance world, right? So we're looking a lot at how we can do asset-backed securitization, how we can tokenize infrastructure and digital securities and things like this. So that's the focus at my academic post. And then I also run a company called CarbonBlue Innovations, which is a venture building company in digital finance, fintech, and the blockchain. We're trying to take this type of infrastructure and digital asset innovation and apply it at scale into different settings. There's a lot of focus on digital currencies these days, and also on digitizing green bonds, right? And I think one of the topics we can talk about today is how blockchain technology can be brought to bear to, allow the lifecycle management to track and trace the use of funds and ESG requirements and things like that, which are very critical to unlock the compliance for a big bucket of multi-trillion-dollar bucket of sustainability money that a lot of financial institutions want to go into this space but cannot because of compliance reasons. And so we're looking at a lot of this sort of digital finance innovation to be able to do that kind of thing. I actually consult a number of governments, and I'm working specifically on potentially doing cross-border green bonds in China, right? So in leveraging eventually blockchain technology to support its the growth of the industry.
So you guys are I think the two right people to talk about our topic today, which is blockchain and sustainability. And just to give a little bit of an introduction, I mean, we've all heard of how much electricity Bitcoin and Ethereum mining consumes, and I think it's been very much in the news recently as well. And I've heard a lot of things on this from people not really familiar with crypto. The statistic is something like Bitcoin mining consumes as much electricity as Argentina, and Ethereum is somewhere on the scale of Iceland's electricity consumption. But at the same time, in the last few years, we've seen blockchain more broadly being used, or at least promises of it being used to promote sustainability, with two big applications, one that you guys mentioned, finance, and another one being supply chain innovations. So we're at this paradox, I guess. So just to kick it off with what's, I think, the more familiar question to most of our audience, can you tell us a little bit about why Bitcoin is such an energy-intensive, Bitcoin mining is such an energy-intensive endeavor, and whether you think we can potentially have cryptocurrencies that are environmentally friendly, or at least not so environmentally unfriendly? Whoever wants to take that question, go ahead.
I can have a first crack at that. So I guess, so globally power is shifting more and more in the direction of renewable energy. So that's a positive. But on the other hand, it's still critical to reduce energy consumption wherever possible. Even with renewables, there are other environmental consequences of the assets themselves and so forth. So, in the broader environmental goals perspective, reducing energy consumption is important. I guess, on the Bitcoin side, or mining generally for blockchain, as many of the people on the line would be aware, that's part of the consensus driving mechanism to secure the blockchain. Mining and processing power is critical in that, at least in that concept. There are other methodologies that are being either launched or developed, and so as you may be aware, Ethereum has now a proof of stake model that doesn't involve, or it's quite a significantly reduced energy footprint, as I've heard, something like 1/10 the energy of mining. And I guess some of the other ways that we look at it in our application. So what we're doing is really accelerating environmental markets, but in the way that we use blockchain, there are techniques. So for example, using, on a granular daily basis, using permissioned or private chains that don't involve nearly an amount of sort of energy consumption for granular daily usage, and only using public ledger, which requires mining in the case of let's say Ethereum 1.0 or other mining, using that less frequently for large block trades. That's an example of, I guess, even with the mining concept, being smart about how you use it. But as things move toward, and as consensus moves toward more of a proof of stake or other low proof of space, for example, I've seen a project called Chia that's got some innovation there, which is quite interesting, that doesn't involve mining again. Last thing I'll say before maybe passing it over to Michael is that in all of these things, and this is one thing I think that a lot of people don't quite look at, is that you have to compare what the business as usual model is for doing something and achieving something versus what you're doing. So yes, in a narrow sense, you've got this mining process that consumes energy, but then what you have to do is compare what you're doing, what you're achieving through that financing, through that economy. How would that be done in the normal sense? Would it involve buildings, flights, bankers and deal makers running it around? So, remember what you're doing. Although in a narrow sense, it is creating a carbon footprint, it's really important to look at how that compares to a traditional means of achieving, an outcome. And I think that's something that certainly I don't have a complete grasp on, but it's also something that I think doesn't get looked at as often as it should. Michael?
Yeah, I think this is a very common question in sort of, say, the Bitcoin world. To answer your question, Eliza, basically a part of the consensus mechanism, what we call proof of work, basically getting a bunch of people to do the necessary work to upkeep and maintain the security of the blockchain requires a lot of computational power. Everybody's just, the way that the algorithm is designed is that everybody's just, using their computers to be able to do what we call these cryptographic hashes. You can think of it as a puzzle that requires computational work to do the upkeep. And it just so happens that because people are getting rewarded by virtually mining Bitcoin as a reward for doing this, that they want to expend as much effort to mine more of it, right? And that is a function of how much compute power they have. So there's a linear relationship with their ability to mine Bitcoin with respect to how much computational power it is. And the algorithm has been designed such that you can have massive parallelism, i.e. you can use specially designed ASICs, application-specific ICs that can speed up the process. And because of this, that takes a lot of energy, right? But I think Bill had a very good point. You have to put it in context and compare apples to apples, right? I mean, roughly speaking, depending on the numbers that you look at, Bitcoin is now consuming, something on the order of 70 to 100 terawatt hours, right, of power, right? That is, just a fraction, if my understanding is, of, say, the traditional banking industry, where, again, you have servers, you have employees taking, cars, driving around, you have buildings with, lighting, this kind of stuff. So as Bill mentioned, if you look at the apples to apples comparison, i.e., supporting a monetary system to support a lot of transactional activity, actually the traditional ecosystem performs worse than what Bitcoin is operating at now. Bitcoin is, it's soloing up the ranks of a mid-sized country. One needs to put it in context, right? I heard that Bitcoin on a monthly basis consumes as much electricity as Christmas lights, right? So you can, do we want to get rid of Christmas lights because, it's environmentally unfriendly? That's a question. Maybe this data point is, if you look at the amount of power wasted by, the chargers that you stick in your extension cord, to plug in various devices, that actually takes a little bit of energy. And if you look at just in the United States alone, the amount of wasted energy from people leaving those adapters into their wall sockets is order of magnitude greater than what Bitcoin uses, right? So I think if you combine all of this, you would say that Bitcoin isn't that bad. Actually, Bitcoin, I also read somewhere that something like they did a study recently, 76% of Bitcoin mining is now on renewable energy sources, right? Or uses that in a hybrid way. So it's not as bad as people make it out to be. And then you have to compare what the benefit is, right? The alternative to the traditional banking industry, but also, this future world of decentralization where, people can, have more control over their assets and how to transmit it. And I think in the end, it is more of a benefit for society than not.
If I could just add one thing that, and so comparing, sort of a traditional model versus how, I guess, finance is being innovated is important. What I'm encouraged by is the fact that incentives tend to align toward reduced carbon footprint over time. And what I mean by that is that, whether it's Bitcoin, Ethereum, or other, consensus models, or chains that use various sorts of consensus, those activities are not in the business of selling power. Their businesses, let's say, or the economics are held back by consuming power. And so the incentives are aligned to achieve that consensus over time in the lowest energy and lowest carbon footprint as possible. That's the way the business interests are aligned. And so as you see projects like Ethereum moving toward a proof of stake, for example, the industry will head that way, because it's not in the business of selling power, and consuming power is a cost. So I'm encouraged, I guess, over time that incentives align in the right direction as well.
Yeah, that's really interesting. I like those comparisons that you brought up, Michael. Like, we waste a lot of electricity in many other ways. We're very good at finding ways to waste power, right? So
We've got to fix
perhaps
that.
Bitcoin. Yeah, we do. But Billy, you mentioned permission chains and so on. So can you talk us through the other types of blockchain that make it more sustainable or consume less electricity, so that we can jump into actual applications of blockchain into sustainability after this?
Yeah, sure. I mean, maybe what would be useful is if I give a bit of an example of a way that we're using permissioned and public chain and why, what it's the impact it's having. An example might be useful. So in the context of carbon financing, you have, and many people be familiar with, emission reduction certificates or carbon credits. These are evidence of emission reductions. They become a financing tool for assets. It's really important in the global fight against climate change to have as efficient a means possible to verify, create confidence, and to create an economy around emission reductions. So that's critical. Historically, and let's say back in the Kyoto markets, this was 2005 to 2012, that process was very time consuming. It required a lot of people visiting sites, gathering data, writing reports, submitting reports. And we were verifying, anywhere from 10 to over 20 projects per year in many countries. It would take between 3 to maybe 6 or sometimes even 8 months each project to get that done. It would cost us between 30 upwards of, maybe 70 to 90,000 US dollars per project every time we did it. Now, all that process is one of gathering the right data, packaging the right data for the market to see and be confident in. And again, that process was people going around, writing stuff down, transcribing it, writing reports, sending reports around. That's why it was so time consuming. And a lot of errors were existed in that process along the way. So one of the things that we're doing is, and this is where it comes to the question you asked, we're using blockchain to, in essence, digitize that process. So directly from an asset, directly from a device that is actually recording the important data, we've created what we call a cloud-based microservice, so a means for us to gather the data directly from the asset. Often, and for example, in a wind farm in Indonesia, we're recording that data every 2 minutes, but to a permissioned, a private chain. Now, doing that on that private chain, it still creates the immutability. It creates the confidence in the data, that it can't be double counted, that it can't be changed by a party later on. But at the same time, it's a fraction of the cost if we had done that on the Ethereum mainnet, for example. So we're using Ethereum, we're using it in a permissioned environment for granular daily activity. Now, if that information needs to be shared with say a single third party, they can be given permissioned access so they can see that carbon data, whether it's for carbon accounting or a green rating, or to demonstrate you're achieving the goals of a green bond, for example. That data is available. It's in a digital environment. It's direct from it's digitally tagged, so it's direct from the asset and direct from the device. If you want to then, let's say, create a product and market that and sell it, that's where it becomes potentially necessary to bring it to a public chain. That's where the energy costs are higher. It'll go down as you move to proof of stake, but you only need to do that very periodically, maybe once a year, once every 6 months, as opposed to daily. So that's let's say, an approach we've taken to get the benefits of immutability using blockchain, get the granular data that the market needs so they know it's real, it's verified, it can't be changed, and then at the same time have the optionality and the ability to bring it into a market and as necessary into that public chain environment. Michael, you have any thoughts on that?
No, I think I just want to point out that I think there's some very interesting trends happening. Speaking, basically, there's a lot of money that's being waiting on the sidelines that cannot come in because of this track and trace problem that Bill is mentioning. Right? Basically, there was a sustainability agreement signed in late 2019. 130 financial institutions representing something like $47 trillion of AUM. These are the JP Morgans and BlackRocks of the world, right? Very large asset management financial institutions. And they've signed a commitment to look into and deploy a lot of their capital into sustainability. But they cannot because they're big financial institutions with lots of compliance requirements, and they can't verify whether or not it meets their standards, right? Things like, the definition of a green bond, by the way, is a normal bond instrument. It's a debt by a company or institution or government. But what makes it green is really, whether the company is going to abide by the standards of, say, the Green Bond Principles or the Climate Bond Initiative. There's a few global standards on this voluntarily, right? And you have to be able to essentially track and trace the use of funds to make sure that these funds go into actually green projects, right? And right now there isn't a way to enforce that, and it's voluntary, and it's actually quite messy because the things are not standardized or enforced, right? And so what that means is that in many cases there's something called greenwashing that occurs, which is to say that an entity issues a bond, claims that it's green, and it's following the standards, and then later on when it gets the money, it's just doing other things. It's investing in a bunch of non-sustainable things, and there's no way to really track or enforce it, right? So that's preventing literally trillions of dollars of money to go into the space. It's already a $350 billion market, something on this order. I believe there's much more demand, pent-up demand for high-quality green bonds than there is high-quality issuance, right? And that's something that blockchain can absolutely help with. In fact, I'll let Bill speak to it because that's exactly what Allinfra does. But basically, by using the blockchain, which is you can go to this next generation internet with the ability to transparently and very easily allow multi-party coordination, in this case, investors or relevant information, and be able to get access to relevant information, in this case, the compliance information, the ESG tracking, and things like this, right? You can even, imagine tying to a smart contract and auto-generating carbon credits and, all sorts of things. Right now, all of that is manual. It's not very easy to do, and it's costing, $100,000 per project in Bill's experience, right? That can be reduced dramatically if you had a integrated system that does all that tracking tracing, and that would unlock that huge spigot of money that wants to go into the space. So I think there's a huge synergy of, post-COVID where green is taking off. Sustainability and sustainable living is something that people prioritize now. It's coming at a juncture point where blockchain technology is also maturing. And this is, in this particular case, blockchain technologies is not just a nice to have, right? Because it can save on a bunch of costs, right? Increase efficiencies by 90%, whatever. They've done lots of studies. This is the enabling thing that will unlock trillions of dollars of money into the space. So it is, I think, a very interesting, synergistic trend that we are seeing here.
And as you were describing that, you reminded me of one important point, which is, so as Michael indicated, green finance, whether it's green bonds, other forms of debt, or even equity, you've got parties, whether it's under a sort of compliance or voluntary model or their own corporate goals, they want to know that the capital is achieving the goals that are intended. And the history of doing that is it's not very efficient. Sometimes it's just, let's take a view on whether a project is green from day one. We'll invest on that basis, but we won't go back and, verify. So that's the history of it. But one thing that's quite important is that under Paris agreements, one of the only binding aspects globally, country to country under Paris agreements, is the reporting. So is the reporting of the carbon impact in the country. So each country has set certain targets, some big, some small, but the obligation to then report up to the UN how governments are tracking in relation to emissions is binding. Now, what that means then, and inherently carbon finance is often cross-border. So you have, for example, Japan has the joint crediting mechanism where Japanese corporates and even governments support projects in other nations. There's an agreement on how the emission reduction rights get shared. That has to be reflected in each country's essentially carbon balance sheet, if you like, get reported up to the UN. So having the ability to efficiently verify, measure, digitally tag who owns the emission reductions, which country has the rights to make the claim up to the UN. The UN can cross-check that data is associated with this, country or that country. All of that's becoming more critical as as climate finance needs to be, essentially avoid the greenwashing issue, but also to meet the legal obligations under Paris Agreement.
Yeah, I'd like to maybe just add to that, to follow on what Bill said. I think the huge opportunity here is cross-border, right? And what's happening now, for example, is we've heard Xi Jinping announce recently at the latest UNGA event that China intends to be carbon neutral by 2060, right? If you look at what that means that China will require something on the order of $15 trillion of investment into sustainable financing over the decades to come. That's something that China probably cannot do on its own. And what China is going to do is, get that funding to get the rest of the world to participate. That means that it's coming at a time where the next development plan for the country is to open up its capital markets, right? And so there's going to be a huge, huge opportunity. I think China's really going to lead the world in this because of the scale and because of the dedication of the government. And you have the president, not only mentioning it once at the UNGA, but subsequently, a dozen times, and really pushing the country to that. So the agenda will be to open up China's capital markets to allow foreign FDI, essentially foreign direct investment into the bond market, which is the second largest bond market. It's about $15 trillion now in China. So the first, I think China's poised to do what I call cross-border bonds, right? Issuances by state-owned enterprise and companies within China, but not denominated in RMB, denominated in euro or dollar. Okay, for distribution for the rest of the world. And you see this very interesting dynamic. One is in Europe and Japan, places like that, the interest rates are zero or negative. Okay, basically the money burns a hole in your pocket because it's not being put to work. So there's a lot of money, and now with stimulus and things like that, a ton of money that has nowhere to park. And now China's going to open up its bond market. And, there's a yield differential in China right now. There's about a 3% yield differential. Basically, the market prices China as essentially a developing country, but China's not really a developing country, so it's de-risked. And so there's a very attractive yield for, sophisticated investors to really come in. So you're seeing a huge inflow of money into China. In conjunction, again, with this trend to invest into green, and in conjunction to the trend that China is also happening to lead the world in digital finance and blockchain technology to support all these things. If there was one trend to look at in the next year or so, and it's happening extremely rapidly, I'm sure Bill can, comment on this as well. The regulations and China's really gearing up to, for example, to harmonize the local bond standards on the mainland with international bond standards. There's just announcements that would happen literally in the last week or so. There's going to be a gearing up of a multi-trillion-dollar opportunity for investments into China through these green bonds. So that's something very, very exciting to watch out for.
This answers, I think, in part one of my questions, which is why now? Do you think that technology is mature now? Do you think we still have a way to go in terms of actually seeing these things be realized? Because I feel like, green finance in general, blockchain-based green finance is something that has been talked about for a long time. And from what I understand, like Bill And Michael as well. I know you have also been talking about these things for a long time, and you have your own ventures. So would you say that we should expect to see a lot more of this happening in the next year or 2 years? Have we reached some kind of inflection point?
I'll tell you my view, and maybe I'll preface it with this, that, for myself and my history of, looking at environmental markets, as well as the way Allinfra looks at the opportunity, green finance, reducing climate risk, reducing emissions, that's our goal. That's our business. We're not a blockchain company. We're not a company trying to figure out, different ways to use blockchain. We're actually the other way around. We're trying to create efficiency and scale in the environmental market. And so when we looked at technology to use, we were very agnostic. We looked at lots of different types of technology. For the moment, the applications that we're using on the Ethereum blockchain, from our view, are the most effective at achieving the urgent goals that we need to achieve now. If there was an alternative or something, and we do use, other technologies that sort of bolt on to that, our goal is to really achieve the most effective goal in terms of environmental finance, and blockchain, is currently a core of that as well. The blockchain ecosystem, there's constant development of applications. There's increasing institutional adoption. And as Michael's sort of framing, the importance of having institutional as well as national, sort of country level and institutional involvement in green finance. When you're talking, multi-trillions of financing, you really need large institutions to be comfortable with the technology, comfortable with the risk sharing. And I think that, the blockchain applications adoption is really becoming, more month by month, more and more institutions are comfortable with their ability to perform or use blockchain in various parts of their business. So I think that it's mature to the extent that it's having a big impact, a big positive impact today. So it's already having, it's already being used, and it's already very effective at improving, what was, let's say, possible 5 years ago. Yet with the development and more institutional adoption, it's not even close to done. So there's going to be a lot more development on blockchain, a lot of other technologies that'll using digital identifiers, digital twinning of assets to really figure out where assets are sort of falling short on efficiency, for example, and then deploying technology. So there's still a lot of work to go on a relatively short timeline. Putting my environmental hat on, these goals of getting to net zero have to really, not only be held to, but be accelerated. Global average temperatures are increasing very verifiably, year by year. And frankly, when you look at the environment on that scale, it's very hard to sort of get the ball rolling in the other direction. So it's urgent. The scale is large. Blockchain is definitely playing a significant role, but there's still a lot of development and efficiency to be gained.
Yeah, I'll just comment. I will absolutely, resoundingly agree with Bill and say that we are sitting at this sort of nexus of a few mega trends that are happening as we speak. So I feel like 2021 in particular is in fact a very pivotal inflection point year where it's all going to change, okay, across a wide variety of things. One, of course, is COVID, right? And what that means is there's a massive push for digitization across the world, right? Offline businesses are dying. Online businesses have doubled or tripled. The digital economy has gone from 0 to now pushed over 40% in developing countries like China and the US. And that's an irreversible trend. And now something that governments weren't really that focused on, it becomes an imperative. You need to, digitalize and get your SMEs and get your businesses online, because that's the only way to operate in this sort of post-COVID economy, from the workforce to trade to everything. And that includes digital money, for example, right? So I think that's a super mega trend. And this is now coming also on some very macroeconomic shifts, right? We have a huge amount of stimulus. Biden just announced a $3 trillion US stimulus. A quarter of the money printed US dollars in the history of humanity was printed in the last year or so. And so there's going to be devaluation of fiat currency. And so that's also going to push a lot of, people to look at alternatives like Bitcoin, which is why Bitcoin's been having a nice 15x run this year, et cetera. And it's also coming at a time where regulation is now finally maturing in all the most rigorous conservative locations in the world, from Switzerland to Singapore to Hong Kong to Germany, et cetera. All the regulation is set, which means that financial institutional adoption, Wall Street and big guys can now come in, and you see that happening on a massive scale, right? From insurance companies to pensions to governments, central banks, right? BIS is saying that 86% of central banks are studying their own digital currency strategy, and within 3 years, 1/5 of the world's population is going to be on that. By 2027, we're going to see $24 trillion of assets. That's 1/4 of the global money supply dumping into digital assets within a handful of years, right? And so, the world is really changing on that, right? And then we have blockchain as a technology also maturing fully, through ecosystems like the BSN, providing interconnectivity between blockchain ecosystems. That's happened in the original internet, right? It's when those intranets that didn't talk to each other start to intercommunicate. It's when digital commerce and a lot of these new business model innovation happened that changed the world and really developed the digital economy. And so technologies like BSN is going to do the same thing in this realm, which is to connect all these various ecosystems up. And within a few years, once they start talking to each other, the digital exchange of value in a general sense is going to take off. And so that is also a mega trend, right? And then you have China, rising with leading the world, not only in blockchain technology, not only in the digital currency, but I would argue the digitization of all assets, right? There's massive amounts. If you're sitting, with the first person view here in Shanghai and other places, there's massive experimentation by large banks, by financial institutions, all experimenting on how to, asset back digital assets and things like that, right? And so, when that gets set, the regulation gets set in short order, and China's capital markets open up, it's going to really be a game changer worldwide, right? So all of these mega trends are happening literally this year, and so I feel that we are sitting in a very unique moment in the history of humanity where the world is just going to digitize, and we all are here at the table. So I think it's something that I think everybody should look at. It's like if I said to someone in the late 90s, you should look at this internet thing. It's kind of maybe going to be important, but I think it's going to be important at a much greater level, because now we're not talking just about a new technology. We're talking about the means of financing, of transferring value, packaging value, transferring value, making it friction free, democratizing this access, bringing financial inclusion to everyone, right? It's going to be a very powerful thing.
Okay, thank you, Michael. Here's to hoping. I will be looking out for that and writing about it and reporting it from China. So, okay, thank you guys for all your comments. So, would someone like to give us a quick summary of what we've discussed? Because I feel like we covered a lot of things and it is kind of a complicated topic. So maybe we should package it nicely for somebody that wants to just skip to the end. Who wants to do that?
Well, look, I'll sort of start by saying this, that there is a bit of, in a sense, luck or fortune, I guess, that blockchain is as mature as it is right at the time that, Paris agreements, a very significant, the largest, and hopefully permanent climate finance structure is set in place. Really, 2020 was the beginning of that, and it's going to be scaling, year by year. Blockchain has sufficient functionality to really change the game there. And so there's a bit of luck that those two things are happening, roughly at the same time. But there's also it's a tremendous opportunity, I think, for the blockchain community to bring solutions into that space. And the reason I say that is I was reading a story recently about why are rails a certain distance apart, and it was traced back to chariots and traced back to wagons and eventually traced back to the width of two horses' behinds. And the story led eventually to why the space, the U.S. space shuttle has a certain width of the two boosters because they need to be transported on rail. So if you look at that story and you look at how laying the foundation for what becomes a large scale, important piece of infrastructure throughout the course of decades and centuries, right now is the moment where the foundation, the tracks for climate finance are being laid, and it's going to move very quickly. So the blockchain community is there. It's at the table. It's got to step up its game and really, look at solutions, really be smart and creative. And the ability for blockchain to then have a role in what I believe will be the largest financial market aspect of the financial markets, sort of climate sensitive infrastructure, emission reductions. That's a huge opportunity for blockchain. It's also a huge opportunity for climate change. So if blockchain can bring efficiency, certainty, optionality, collaboration, it's really going to help, the climate finance market take shape and give us our best shot at dealing with climate change. And I guess the last thing I'll say there is that climate finance tends to be a topic where people involved feel really good about it. And in my view, and much of the climate finance I've done over the years is in China. I've enjoyed it tremendously. And to me, collaboration on climate finance is such a great opportunity, despite some of the friction and sort of issues that any particular countries have with each other on various topics. But climate change and dealing with it is a topic that everyone agrees on. It's a really great on-ramp for warm collaboration. And so I think, tying that all together, we have to do it. It's a lot of fun. Blockchain can play a significant role and can be part of the fabric of that. And I believe it will be. And I think, with BSN, bringing these topics to the market and with groups like CarbonBlue and Allinfra collaborating in this space, I think we've got at least our best shot at dealing with climate change.
Thank you, Bill. That's very hopeful. Okay. Any last remarks, Michael, before we've been going on 40 minutes now, and I was hoping to keep this short and engaging.
Sure.
I think we've done a good job so far. Yeah.
Really, like I said, I just talked about all these mega trends, and I really like Bill's analogy about how we're building these fundamental sort of rails and substandards, which is going to really accelerate our progress in the space. So. Already, I think in the last couple of years, specifically with the green bonds, it's become a very, and also I would argue, after, many years of, carbon credit market has been sort of, slowly developing, but it's reached that critical point where it's now flourished as well. So I think we've reached that inflection point, and it's also not just green and climate, but it's also, I would say, the broader category of sustainability. As a new category of financing, which will be very important again post COVID, where there's a social elements and other sustainable SDG goal type elements that come into that. That's really become the forefront of everybody's thoughts these days as, we pull out of COVID and as we become more socially conscious to be able to develop. And, the one other thing that I think we didn't really talk about, but I think is very important to consider is that blockchain as a technology really lowers the bar for participation. So, for example, just in the green bond market, usually you need to be an institutional investor. You need to have hundreds of thousands of dollars. You need to register with exchange. You got to do all these things to partake in that market. And with blockchain technology, you can actually, tokenize, digitize these securities. You can fractionate the ownership to, literally $1 or a fraction of $1, same delivery costs, that kind of thing. And what that means is you can reach a completely retail market. Imagine every citizen down to, the homeless person on the street with an extra buck in his pocket, can now invest into the country, or not just their own country, invest anywhere globally in the world, because now the technology allows no limitations in geography or distance or time, or the size of their investment. And so that's going to bring massive financial inclusion and opportunities for investment for people around the world. I mean, there's 2 billion people who don't have banks. They cannot bank. They cannot even invest into products that will allow them to keep up with inflation, right? They're financially excluded from that kind of stuff. But with the promise of this new technology, they can get access to that. And I think that's a beautiful thing.
Okay, thank you, Michael. Thanks, Bill. Thank you for joining us today. Thanks, BSN, for organizing, and thanks to whoever is watching this in the future. Great.
Thank you. Appreciate it. Thanks, Eliza. Thanks, BSN.
Thanks, Eliza.
Okay.
Bill, let's see you again.